Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, I know you're not feeling 100%, so I really do appreciate you taking some time out of your day as you're trying to rest up here to give us a couple more insights on the precious metals market. Now, there's no doubt that precious metals have done pretty well over the last couple weeks, even couple months. They have continued to move higher, and it has a lot of people thinking, well, is this bottom actually in? Do we finally have a bottom in the precious metals sector, especially for the underlying metals? Not so much the stocks, because a couple of the stocks have still been fairly weak. But you have been more so than anybody on our show saying that a bottom looks like it has been in, or at least it has formed on the charts for gold and silver dating back a couple months. Take us through your thoughts now. Do you have more conviction on that bottom is in call?
Yeah, Corey, I think I have a little bit more conviction. I think that, first of all, with respect to calling bottoms, it's really an ego thing for a lot of people. So I'm not trying to say I called the bottom or, this is the bottom and I'm the only person calling it. I'm merely just trying to point out that if you're looking at the evidence, if there's a bottom versus it's not a bottom, the evidence really favors that we have seen the bottom. I mean, if you look at sentiment, most of the sentiment indicators were really blown out in the last couple months. The net spec position in gold, I would have liked to seen that go a little bit lower, but if you look at open interest, it had its second biggest decline in the last 20 years. It fell down to a 3-year low. If you look at sentiment trader and the optics, which is probably similar to the daily sentiment index, and you look at a 20-day, 50-day, or 100-day moving average of that indicator, it basically came down to a level which was similar to all major lows of the past 20 plus years. So, and then the technicals, and something I wrote about, 2 or 3 weeks ago, we had these divergences. Gold broke below 1675, and silver had already bottomed at that point. So if you're in a bad bear market for precious metals, even a bad cyclical bear market, and gold breaks below the corrective low during the cyclical bear market, I mean, you would think silver and the miners would really dump hard on that breakdown. And so that didn't happen. Silver had already bottomed, I think, before gold broke below 1675. Even when gold traded down to 1620 or so, or 1630, silver failed to make a lower low at that point. And shortly after gold broke down, I mean, you had the stocks basically bottomed at the end of September. And, gold more or less did bottom at that point. However, on November 4th, gold intraday traded at 1618, and that's actually the lowest price throughout the entire correction. So that happened. Yet, if you look at that day, where was GDX? Where were GDXJ? Where were the silver stocks? Where was silver? They weren't even close to trading at a new low, as gold did in fact do on November 4th. So and now you have the big rally up to near 1800. So for the most part, it looks like that was a failed breakdown in gold below 1675. So you look at those factors, and then on the fundamental side, which is the most important thing, it's something I've been talking about for the last month or so. How much more Fed tightening is there going to be? Now the Fed's up to 4% now. You have the December meeting coming up. I mean, they've been lucky. Nothing is broken yet, at least domestically. Yield curves are inverting all over the place, but economic data is still holding up. But the Fed knows that, we've done a lot of tightening and the yield curves are telling us a recession is coming. Even the two curves that the Fed specifically, there's one which I think it's a difference between it's the 2-year or the 3-month yield now versus a forward of it 18 months into the future. And Powell said he said in 2018, when that inverts, the Fed is going to start cutting rates basically. Now that relationship just inverted last week. So we're seeing all these warnings. The Fed knows this is really a bad idea if we keep hiking. And that's why we've probably had this everything rally in the last several weeks or so, because the market's starting to discount, look, there's not that much more tightening left, at least vis-a-vis the Fed funds rate. So when you look at that fundamentally, what's the bearish case against precious metals right now? It's really hard to make that case fundamentally. So when we look at the whole picture, that probability tells you that the bottom is probably in for precious metals and that the cyclical bear market is over. Now, I mean, it's not an ego thing. The more important point is, the long-term downside risk from these levels is limited, and so you want to be a buyer on weakness. Like, that's the more important point than me trying to puff my chest out and say, this is a major bottom, everybody back into the pool.
Well, Jordan, I'll tip my hat to you because I remember 2 months ago in September when we were discussing the non-confirmation bottom of silver potentially bottoming first. And to the point you made, I think it's a great point. Gold still went down in early November and made an even lower low, but the mining stocks had turned up at the end of September, taking their cue from silver. And so they really were following silver up. So when you saw silver and the mining stocks start moving up throughout the month of September and keep plowing higher when gold was still struggling, I think that was significant. And I guess the question people have now is, after this rally we've seen, the beginning of the rally had a lot of volume at the very beginning in silver and in some of the mining stocks because it was probably a short squeeze. But now things have tapered back off. We also had the US dollar pulling back, which was a good tailwind for everything, not just the precious metals, but the commodity sector. And now people are worried that maybe the dollar could bounce here. Are you concerned going into the end of the year that maybe the dollar bounces and pressures the metals, and that we may still also see that proverbial tax loss selling that really kicks off after Thanksgiving and runs through the first few weeks of December?
Yes, well, there's a couple of things to unpack there, but I will say the question is, let's just presume that a bottom is in for precious metals. Then that leads me to the next debate, which is, are we going to see a rebound off the bottom like we saw in, let's say, 2016, 2008, 2020? Or is it going to be more like 2018 or the early 2000s? When you look at the gold stocks, even in 2016, that was a failed breakdown. Like, they were basing for months and months before that failed breakdown at the end. You look at 2018, bottom was in August, but the miners didn't really take off until December when the Fed did its last hike. So when I'm looking at those factors, and also what you mentioned about the dollar, that's an important point, because during this rally, everything has been going up, and that's not sustainable for precious metals. So gold hasn't been strong enough in real terms. And so I think, the dollar, looking at the dollar, it could have a bounce. I think the medium-term trend could be down here, but nevertheless, for this to really sustain in precious metals, we do want to see them stronger in real terms. And so I think, because of all these reasons, I think you could get some, backing and filling and some basing for a couple months, like we saw at some of those other bottoms. Because fundamentally, the real driver, I think, is going to be when the Fed does its last hike. After that, you'll probably see even more of a lift. So I would like to see precious metals soften here for a month or so, and then be in position to have a sustained rebound when the Fed does its last hike, whether it's December or January. I don't think they're going to hike past January. So that would be a good setup for a sustained rally, starting sometime at the end of December or in January, I think. But with respect to tax loss selling, I haven't seen that affecting the larger companies as much. And if you look at the indices of GDX, GDXJ, Huey, SIL, SILJ, I'm looking at these right now, and even gold and silver, those charts are much stronger than individual juniors. And we've seen this in the last 2 or 3 weeks where the sector is up a good amount, but some individual stocks here and there, they're down on big volume. And that tells me that we've seen just random big holders in these stocks. They could be just selling for tax loss reasons. They could be capitulating because they've had enough. It hasn't worked for the time being, and I just want to take my loss and, move on and start the new year fresh. So it's interesting to me how, these two things, there's a lot of evidence that the bottom could be in, the bear market is over for precious metals. But at the same time, a lot of juniors could be in good position to rebound into January because of the tax loss effect. And in addition to that, what if their last hike is in January? That's gonna give juniors even more fuel in addition to the tax loss bounce.
Okay, so Jordan, there are some optimistic signs here. Obviously, look at how much some of these metals have moved. Some of the stocks moved well off decent volume. But to your point, maybe a little bit more of a base building is needed here. Let's focus on silver because, as you guys have outlined, silver really does have a bit more of an impact or relates a bit more to the underlying stocks, especially the juniors that we trade. Silver made a run up to just over that $22 level, I believe, and now it is right at that $21 level. I'm looking at the silver chart, and there is a fair bit of resistance levels right around this 21 level, also down to 20. Do we need to hope that silver doesn't break 21, doesn't break 20, doesn't go back into the teens to withstand or sustain this more bullish outlook?
I wouldn't worry about it, even if silver comes back to 19 or 20. I mean, if you look at a weekly chart, I think there's three different lows around 18. And looking at, we know that gold had this false breakdown below 1675. The 1870, that level for silver, confluence of a lot of resistance there or support. And so silver failed to break below that. I mean, it did. I'm looking at the daily chart. I mean, it had three bottoms near 1800 and one time where it went below. So I think there's a lot of support at 18. I think there's a good bottom in silver. And so if silver comes back to 19 or 20 and is just dead money for a couple months, that doesn't really worry me that much. $22 is really, really significant resistance. I mean, we'd have to see multiple weekly closes above that or a monthly close, or maybe silver, it would have to really surge above 22, I think, to have a meaningful breakout. That's really significant resistance. So I'd actually prefer to see it consolidate here for a month or two. And, on the fundamental side, more so for the sector at large, we do need to see this move in the S&P roll over, and then, the Fed thinking about having to cut rates. Some people might think that's a couple months away. Other people might say, that's 9 months away. But that, to me, is going to be a really important fundamental driver for precious metals, not just in the next couple of months, but 3, 4, 5, 6 months. I think if the economy rolls over in the first quarter and this rally really rolls over in the S&P, you could see silver and the miners and gold to a lesser degree, they could get hit. That could be part of the base building process. But that would be a good thing, because ultimately, market rolling over, recession, Fed having to cut rates, that's what's going to get precious metals into a real bull market. We've been watching this stuff long enough to know that, what we've seen so far over the last couple of weeks, like, that's not sustainable. If the stock market keeps going up, precious metals will fizzle out.
That's so true, Jordan. We've been around for a while. We've seen these moves. Look, it's encouraging now to see a bit of a base being formed. Let's just hope we don't go straight back down to some of those lower levels that were close to some breakdown levels. But we've gone pretty much straight up since almost reaching some of those. So we'll see where it all goes from here next little while. Again, we're still hostage to what the Fed's doing, but a little more money being allocated broadly by investors, always helpful. Jordan, thank you as always for your time, buddy. I hope you start feeling better. We'll hopefully chat next week. I hope you have a great weekend.